I used to think that investing was hard, boring, or complicated, but I found the perfect stock investing course that showed me how to invest as a complete newbie. Now I can build wealth in the stock market and do all the things that I enjoy at the same time. Check out the Lazy Investor Stock course and get started on your wealth building journey today.
What's going on, everybody? This is David W. Williams, also known as the Retail Trader, right? Appreciate y'all coming out on this Friday. Know that a lot of people getting off work, getting ready to roll into the weekend. Appreciate everybody for coming through. Really quickly, what we want to break down is the real reason Trump had to hold off on tariffs, the power of the credit desk, right? This video is going to be for people that want to really understand how these financial markets work so they can put themselves in a better position to leverage these financial markets to get the life that they desire. This video is not going to be for Trump cheerleaders. This video is not going to be for people that just don't like Trump for no reason. This video is not going to be for people that just want to be argumentative for the sake of being argumentative. That's not who this particular video is for. This video is for people that really want to understand how these particular financial markets work so they and their group can leverage these financial markets so they can get the life that they desire, because these things are going on all around you, right? And what makes this particular platform different than everybody else, as opposed to talking about the latest trending topic of the day, right, or the latest trending topic of the week, and every 3 to 4 days we're talking about something different so people can get that dopamine hit. What we've done here is we've stayed very, very consistent in talking about the financial markets, talking about economics, talking about how economic warfare is impacting you directly, and consistently talking about that particular topic for the people that want to get that kind of information. So again, because I know we have something in this particular media space called audience churning and audience attraction or audience acquisition, where we know that we get a certain amount of attrition on our audience. So what we do is we try to figure out how we can create stories or create campaigns to bring in new people. That's cool, but I'm not really here for that. I do want a bigger audience, but at the same time, I'm not trying to figure out how to be provocative for the sake of being provocative. I really do believe in what I'm talking about here. And I've really seen in real life the fruit of what we've been doing on this particular channel in people's actual real lives, right? So just giving you a disclaimer, this is for who this particular video is for. If you're not in any of those particular audience buckets, keep it pushing. You can talk about, reaction videos to the cows come home, why this person did this, yada, 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 this, that, and the third. There's plenty for that. Go ahead and start your weekend off, get high, do some drugs, have sex, whatever, right? So I just want to give you a disclaimer on what we're doing this for. So what we're talking about is the real reason Trump had to hold off on tariffs, the power of the credit desk. And what I'm trying to do is persuade you and try to get you to understand how this market actually works, right? Not how somebody who is an entertainer is telling you how the market works because they are an entertainer, not how somebody's just randomly talking because they think, because they read some book about the Jekyll Island and they think they know how this stuff works. I'm telling you to the best of my understanding how this works. And the reason why I can stand on what I'm talking about is because I actually trade off my own understanding of the market, right? I don't just make YouTube videos about it. Right. So I want you to understand is I spend a lot of time studying. I spend a lot of time applying myself. I spend a lot of time learning consistently so I can further educate the people around me so they have a head start in areas in which I did not have a head start when I was their age or when I was in their position. Right. Because I've been the person where I got a whole bunch of money and I don't know what to do with it. And CDs was paying 1 point something percent. Right. And money market accounts were paying 1 point something percent. And I had a lot of money to me and didn't know what to do with it because I didn't understand how these financial systems actually worked, right? And so because I've gone through those experiences, I know that there's other people going through those same experiences, and that's the people I'm trying to help, because you never know when you're going to run into some money. You just think you don't know, but anything can happen. You might fall into $1 million next week. And so I want you to have the understanding and the wisdom of what to do with it, right? So let's get into that real quick. So really quickly, before we keep going, show is sponsored by www.thehighestpaid.online. In my opinion, it's the best options trading academy in the whole world, right? Based on the fruit that we've been able to produce out of the particular academy. We want to get a little bit deeper into that. If you're looking to understand how to trade options to get the life that you desire, right? If you're looking to try to figure out how to generate more income into your situation, and you're willing to put the time and the energy into learning the particular space, and you're willing to dedicate yourself to this space, right? We believe we have something for you, but it's going to really take you making the investment in yourself and your education. Right? Because anything in life, right, it's going to be pros and cons to it. Any market has its pros and cons. It has its good situations, has its bad situations. You got to figure out what area of the market works for you. And I would encourage you to go apply yourself in that particular area. I'm very much niched in the options market and the equities market. That's where I'm niched at. That's where I've become very proficient. There's a million different markets for you to get into, but whatever you decide to get into, you're going to have to apply yourself for a consistent amount of time. You can't jump in and out, and every 90 days you're doing something different, right? So that's what I want to really encourage you to do. Take a look at what we're offering. You don't have to wait for a discount to buy it. The value is way greater than the price, and let's keep it pushing, right? So let's talk about real reason Trump had to hold off on tariffs, right? The power of the credit desk. So let me tell you something real quick, right? In my own opinion, okay? So really quickly, based on my opinion, right? This is a credit economy, right? That means it's a debt economy, right? So I'm going to try to persuade you out the end of this video to understand what I mean by this. This is a credit economy. That means it's a debt economy, right? And what I mean by that is that this economy, right, that we actually exist in, not just the United States, but pretty much any of what we call the developed world countries, right? Not all of them, but many of them. This economy is based on credit, which means it's based on debt. Okay. And that's pretty much how this economy works. Okay. And if you actually look at financials, you look through people's situations, you'll start to understand that. But many people don't look at balance sheets. They don't look at financial situations. So they don't understand that this is a credit economy, which means it's a debt economy. So this is why I say, right, for this particular title of this video, right, the power of the credit desk. Okay. And many people don't know what the credit desk is because they've encountered the credit desk, but had no idea they were encountering the credit desk. When they went to go buy a home, they had to go through the credit desk. When they went to go buy their car, if they financed it, they had to go through the credit desk, right? If they went and got a loan to go to school, they had to go through the credit desk, right? They've gone through the credit desk multiple times, but they have no idea that they've done it because they'll call it something else. But really what you're doing is you're going through the credit desk, right? And there's different versions of the credit desk, but it's still what we would call in the finance space the credit desk, right? So this is a credit economy. That means it's a debt economy. And that pretty much works for the majority of people in this society. Now, you can be one of those people where you choose to just do all cash purchases. I don't have any opposition to that, but that's going to be the minority of the population, right? And for most people, that works because they're making a certain amount of income. It's easy for Dave Ramsey, who's up millions of dollars, to tell you to do everything cash. He can go do it cash, but a lot of people can't. Right? Most people can't buy a house with cash. They don't have that kind of money, right? So this is a credit economy, which means that it's a debt economy, right? So let's keep going. So here's what I want you to understand. This is the plumbing of like a house, right? A lot of what I've tried to do on this channel and a lot of what I try to teach people is how the actual plumbing of the economic situation works, right? How this economic system works based on the plumbing, which is what's going on behind the scenes, right? Because if you understand what's going on behind the scenes and how it all works and how it's all put together, right, you understand what's going to happen. So let me give you a real quick story, right? So about a year ago, maybe a little over a year ago, I was watching the Cowboys play football, right? And so they was running a play on offense. They came out in a I think a 3 wide receiver set, even a shotgun set, had a slot receiver. His job was to run down the field and move a DB out of the way so Lamb, who was another receiver, could come in behind him, and they wanted to get the ball to Lamb. So the goal of this particular receiver, right, is to move this other DB out of the way, to move him, to let Lamb come and replace that guy on the field. We get a ball to Lamb, and Lamb turn up the field because while the space has been vacated by that DB, that was the play. They ran the play, right? The DB, instead of moving with, I believe the receiver's name was Cobb, instead of moving with Cobb, he just sat there and looked at Dak. And Dak threw the ball, he jumped the pass, and he ran down and got a touchdown. Because why? He never moved. Why? Because he knew that's what they was trying to do. Because he understand if they line up like this in this formation, this particular down and distance with this personnel group, this is most likely what they're trying to do. Then it's not just comes down to probability, right? But he understands that because he understands the plays that Dallas Cowboys like to run. He understands their plumbing. Right? Many times we don't understand the plumbing of these financial systems. We don't understand the plumbing of it. And if you look at this plumbing, it's all connected. That's how plumbing works. Right? So that's why a clog somewhere in your plumbing can now start to clog other parts of your plumbing because of how it's all connected. Right? But we necessarily don't understand the plumbing. So what I've really tried to do with what I'm talking about is I've tried to get you to understand the plumbing of this particular economic system, the plumbing of how this particular financial systems work. Because I believe that if you understand the plumbing of it, you'll be able to now infer what is getting ready to happen next, right? So the goal of what I've taught in my options trading course, and anybody that took it can speak to it. I don't just teach people, hey, here's a candlestick pattern, just buy this, right? Or, this happened, just go buy this. I actually try to teach you, here's how this whole organized structure works, especially in the VIP course. I spent a lot of time trying to get people, right, to understand that, right? So let me show you what I'm talking about. The goal of what I'm trying to do on this channel is to get you to be like Jason Kidd. What was Jason Kidd's real gift? Jason Kidd can see the whole court, right? That was his ability. It wasn't that he was a great athlete. It wasn't that he was a great scorer. He was a good defender. But his real talent was God gave him the ability to see the whole court. So he can see everything, right? Many people can't see the whole court. They just can see what they're trying to do, right? They're very locked in on what they're trying to do. He can see the whole court. So the game was easy for him in certain areas because why? He could see the whole court, and he also could see what people was going to do on the court before they did it. So some people can see, hey, I can just tell by your body language what you're getting ready to do. So that's what I'm really trying to help you get to, that level of competency, right? Where you now can start to see, hey, this is how this thing is laid out. So this is how I believe it's going to happen. Not based on what somebody else told you, based on you being able to come to your own conclusions, because there's too much of that now on the internet, where it's about what this other person said. Ain't got nothing to do. It ain't even about what I say. The goal is not for you to go about what I say. The goal is for you to be able to come up to your own conclusion. That's the goal of what I'm trying. It's an empowerment opportunity. It's not just for you to keep coming back to me, because I'm not going to be here forever. So that's what I want you to understand, is that the goal of what we're doing here is for you to get to the ability where you can understand it on your own. So let me show you something real quick, right? Let me go ahead and bring this out. So we're not going to be here too long. I don't want to hold y'all. So here's what I have been posting since the top of the year, right? This is a month ago. But I've been posting this, right? We had a sell-off earlier. I think this was in March, right? I said, told you the bond traders are out there. When they come into the market, it will make today look like an ice cream and sundae date on a Sunday afternoon, right? All they care about is bond price, bond yield, and bond duration. I've been putting out these posts, right, about bond traders since Trump got elected, because I knew what was going to happen, right? So I'm not coming in after the fact and saying, no, I'm telling you, I've been saying this. Now, I don't know if you're not getting it. I don't know if there's a communication breakdown. If you don't understand, I wish you would tell me. But I've been saying this over and over again ever since Trump got elected. And it's not about Trump. It was about how this plummet of this market actually works, right? We could pull Trump out and put somebody else in, right? If they do the same activities, we're going to get the same result. Okay, let me show you something else, right? Let's keep going with it. I put out a video, okay? This is the members only about a month ago. The bond traders will crush Trump's economy. What you need to do to save your investments. Same thing, right? So again, this is not a reaction video to what happened 4 days ago. I've been talking about this. And I'm not saying it to say I told you so. What I'm saying is that this is obvious to see once you understand how these systems are set up, right? Everybody knew that this was going to take place. Because why? How the system is set up. It's set up a certain way. So if they do certain things, the probability of a certain result is going to be very, very high, right? That's what I want you to understand. Okay. So again, the goal is to get it to where you start to see it. Because if you are astute, in my opinion, about these markets, you would have seen what you saw happen this week. You would have seen that coming a mile away. It had to happen because of what everything else is going on. And so I think a lot of people get stuck on the wrong part of it. Again, if we're playing sports, if you're keying on the wrong thing, you're never going to be able to put yourself in a position to make the play. So the goal is to try to help you key on the right thing, right? There's guys that got YouTube channels now, they ex-quarterbacks, ex-linebackers, and they teach people when you playing, this is what you need to be looking at. Because if you're looking at the wrong thing, you can't never make a play, because why? Your eyes in the wrong spot. Right. And so when I talk to a lot of people about these markets, I often ask myself, I wonder what they're looking at, because what they're telling me is not really what is actually going on. I don't know where they're getting that information from. So that's something I want you to really understand. The way this particular situation rolled out, it was going to happen because of the way in which this particular situation is constructed. So let me tell you what I'm talking about, right? Let me stop this screen. Go here, go back to here. Okay, so let's go here. So let's talk about financial market integration, right? Because what we have to understand, if we're going to really understand these markets, is that all of the major developed financial markets are integrated now. It's 2025, right? So the definition of financial market integration refers to the process where financial markets across different economies become closely linked, enabling the free flow of capital, information, and financial services, right? So key aspects of financial market integration: cross-border capital flows, information sharing, foreign participation, elimination of barriers, right? One of the biggest ones is cross-border capital flows, where domestic investors can buy foreign assets and foreign investors can buy domestic assets, which means that people from outside the United States can buy assets and people inside the United States can buy other foreign assets, right? Next one, potential drawbacks: increased risk of contagion. Integration can make financial markets more susceptible to global shocks and crises, uneven distribution of benefits, and increased volatility. Okay, so what we saw earlier this week was that the Asian market started to sell, right, treasuries. Okay, so we have the Asian market starting to sell treasuries, and what we're worried about is that may spread to other markets. Because if you really are in these markets, you know that these markets are going on 365. They're going on pretty much not 24 hours a day all the time, but they're going on pretty much 24 hours a day because of time zones. So there's pretty much, based on your asset class, there's pretty much no time of the day in which you can't be involved in some type of market activity. With crypto, it's pretty much 24 hours a day now, right? So if we're having a breakdown in markets in the Asian market, we may be worried that might get spread into the UK market or might spread into the US market. So we will, in the morning when we wake up, we got to do something to address that particular situation, which is what we saw happen later this week. Okay, so that's what I want you to understand, is that because of financial integration, right, and because of how these markets are connected, if something happens in another part of the world, it can impact our U.S. market, and same thing with vice versa. So that's one of the reasons why the financial crisis in 07, 08 was so bad, because of the markets being integrated, right? You want your market to be integrated now. You really don't want your market to be segregated, because segregated markets don't have liquidity going into those markets, because you really want money from all over the world to come into your market. And that's one of the benefits of living inside the United States, is we get money from all over the world to come into the United States. Other countries don't have that, I would say, privilege. In the United States, we do. So what it also means is we have massive liquidity. Right? Go to other parts of the world and you try to do financial transactions, it can be very, very difficult. Right? So that's something I want you to understand. So understanding this concept of financial integration and how not only does it impact the United States, but it impacts other markets that are connected to the United States. Okay. So what we know now is that we're talking about the bond market. Let's talk about how this particular situation with these bonds selling off earlier this week and how it impacted Trump. Let's watch a video on that real quick and then keep getting to the rest of the particular presentation.
Than a week of turmoil on financial markets around the world after Donald Trump caused chaos by announcing tariffs, then pulling back on some of them, and then intensifying what now seems to be a trade war with China. But while Trump was able to stand a certain amount of fluctuation in the stock markets, many experts think he was spooked when bonds also began declining. And it's not the first time a leader's economic plans have been derailed by the bond market. Simon French joins me now, chief economist at investment bank Panmure Liberum. Simon, can you just explain to us, first of all, what the bond market is and how it differs from stock markets?
So the bond market is the market for capital that lends money at a fixed income rate to governments and companies around the world.
So basically you are financing a government's ability to be able to borrow a government's debt.
Exactly, and they pay a given interest rate for that, but that debt trades after it's been issued, and the interest rate can go up and can go down. And what you've seen, and I think you rightly pointed to in the introduction, is a very volatile economic and political backdrop has meant that investors are repricing how much they're prepared to pay to lend to all governments, but most particularly the US government. And because the US government has borrowed a cumulative $34 trillion from the bond market and really is the global reserve asset, the global safe asset, what happens in that market has massive ramifications ramifications around the world.
Okay, so something he talked about is that people are starting to repricing what they're willing to pay the U.S. government to finance their debt, right? And so that can have implications into the United States, because if we are doing deficit spending and we're doing, essentially our government services and our government programs are financed through debt. And if the market says, okay, well, we're going to change what we're willing to price to finance your debt, right? It can impact, right, how people conduct themselves inside the United States. It can impact how politicians conduct themselves and things of that nature. We're going to go a little bit deeper into that. But I want you to kind of understand, because I think it's lost to, and we're going to get a little bit, I think it's lost to the average American that our government operates on debt, and our government has to be able to sell debt in the financial markets to generate the money it needs to operate our government. And I think because this system works so efficiently in that particular area, I think that the average American doesn't see it. It's very seamless. It goes on behind the scenes, and they're not involved in it. The average American is spending so much time just trying to make their money, pay their bills, pay their house note, pay their car, keep their relationships together. They often don't have maybe the privilege or the energy to focus on this particular area. But I'm telling you is that this is really, really important, because without this ability for our government to do this, we don't have the same type of country, right? So it's people believing that American U.S. government debt is so attractive, right? They believe in that is so attractive, then wanting to get that particular return on that capital is the reason why the only reason, but one of the reasons why we currently have the country we got right now. Go to other countries where they can't create the kind of market for their government debt, you get a totally different type of country experience. So these things are really, really important to kind of understand. So this is why I teach what I teach, because I want to put you in a position to where when people say stuff to you based around economics, when people say stuff to you based around the markets, when people say stuff to you, you don't fall for it and you don't get hot button and you don't get emotionally riled up, because you know it don't work that way. And for years, what has happened is because we're so uneducated around a lot of these spaces, people could come to us and say, well, you know what, this and this can't happen because of 1, 2, 3. And then what we do is we argue with them, and we don't know that they don't know what they're talking about. They're just talking. There's nothing for me to argue about. Right. So, again, this is why I don't get put on certain shows, because we're going to cut straight to what the actual facts of this economic situation are. We're not going to do no going back and forth. Right. So let's keep going.
Normally, when we see market turmoil like this, what would we expect to happen in the bond market?
Well, so for UK viewers, actually, there'll be bring back memories of 2022 and the aftermath of the mini budget, when the bond market, when it is not confident of the economic strategy being pursued by a pretty indebted government, and there are the parallels between Liz Truss and Donald Trump, they tend to say, right, actually, we will demand a higher interest rate for your debt, and particularly for long-dated debt, when, of course, the longer the duration, the more uncertainty about how profound those economic impacts might be. And what that does is it reduces the amount of leeway that a government has to pay its bills, to continue to do everything that it wants to do. And Donald Trump wants to do a lot of things, not least he wants to cut taxes in the US. And again, similar parallels with 2022 in the UK. And if the bond market says, no, we're not prepared to do that with a higher interest rate, it is the ultimate arbiter of how much political and economic power even a president has.
Okay, so that's something he talked about. If the government has to sell debt to finance its particular programs, and the bond market says, well, no, we're only going to do that at the highest interest rate, then what does that mean? It means the bond market can now dictate the success or failure of that particular political administration. So that's why I try to tell people traders run the world. They'll never get this fooled. Traders run this world. They're not the only people that run this world, but they are a power in this world, because the number that they set on what they're willing to pay for government's debt can determine whether or not that government can finance its government. So every so many terms, this government says, okay, we got to go sell debt to finance what we want to do from a government standpoint. If those traders say, well, you know what, we were saying we want 8%. Now we want 30%, right? Well, the government now got to pay back that stuff at 30%. Right? Because they got to pay yield on that particular bond. Because we believe that the likelihood of this particular government being successful is so low, for us to take this risk to do business with you, we want 30%. Now the government got to figure out how to make that work, which means what? The cost of paying back its debt is going to be more expensive over time. Right? So these are the things I want people to really understand, is that this idea to where these people have all the power. I've been saying this for years. And that's why when Trump got elected, I started telling people the bond market is going to dictate how this thing is going to go. And I don't use these little catch terms like bond vigilantes because they're used to make sure people don't understand it. It's a colloquialism. I want you to understand how this thing goes. We live in a society to where our government, our national government, is financed through debt, and it sells that debt to certain parties. If those parties demand more or higher yield to do business, it could impact the success or failure of that particular administration. So this is why you saw Trump adjust himself this week when the bond market started to go crazy. Because what happened is people started selling U.S. debt. And we're going to get into some of the implications of that because Trump's not going to be in office for 30 days. He got 4 years of this. So he has to figure out how to come to good terms with the bond traders, with the bond market, right? Because he's trying to get a bill passed. We're going to get into that. So there's a lot of implications here that the average, because they distract you with, trans people playing women's sports, right? So-and-so got shot down there in Texas. They distract you with that, but this is really what's really going on. The rest of that stuff is a distraction, so you don't focus on this. Okay, let's keep going.
As you mentioned there, this is a safe bet often for investors, especially when you talk about US bonds. The fact that they are selling off, is that a sign that they no longer trust the US or trust them less than they once did?
Trust them less than they once did. There is a lot going on. It's not just the tariffs, although the tariffs probably was the catalyst here. There's a gentleman called Steve Mirren, who is the head of the Council of Economic Advisors for Donald Trump, quite a relatively obscure economist, but he wrote a paper before Donald Trump's election, which suggested that if countries that were tariffed didn't come back with compromises and concessions, if they owned US government debt, they would be forced to substitute that debt for debt that doesn't pay an interest rate, doesn't pay a coupon. Now that feels, and in the case of rating agencies who rate how good or bad anybody's debt is, that would look like a default. And for the world's biggest and most important debtor to be even talking, even negotiating around what might be a technical default, that is definitely what has spooked bond markets.
Do you think that trust will return, or has something happened here because of this turmoil, because of the uncertainty, that cannot be undone?
No, I think it's far too early to draw that conclusion. This is one president who is in his second term, and the current make of the Constitution suggests he can't have a third term. So the markets can, to some extent, look through that. Also, this is not a pain-free decision from investors to pull their money out of US government debt. I mean, for example, in the UK, half of pension savings are in either US equity or US debt. And therefore, if the value of that falls, that has profound impacts on our retirement incomes, all of us. And so the idea that that is going to happen wholesale, that pension funds, institutional investors, sovereign wealth funds, retail investors around the world are going to lose faith, is almost certainly not going to happen wholesale. But even if it happens at the margin, that can be quite painful for investors with a shorter time horizon.
And Trump did mention this when he was talking about his decision to delay those other tariffs on countries that he said he had bigger tariffs on him, although those figures have been disputed. Do you think this was the thing that spooked him, that pulled him back?
Yes, I do. We won't know probably until memoirs start getting written, but I think enough people who are active in the industry, particularly in the hedge fund world, particularly on Wall Street, saw the type of pain that we saw again parallel to 2022 crystallizing, where the Federal Reserve, the equivalent to the Bank of England in the US, was very, very close, we think, this week to bailing out a number of hedge funds who were coming under huge stresses. And at that point, what tends to happen is the head of the big investment banks on Wall Street, or indeed the head of the Federal Reserve, Jerome Powell, would have put a call into the White House and said, this will be the impact in pretty short order unless you change path. And I think that was what changed the president's calculations.
But just to go back to this point.
And so let me start right there, because we see that because of a lot of leverage that a lot of these large investment banks have, things got very shaky for them. Because again, they have to go through the credit desk, right? And so what we see is that because of financial integration, because of the amount of leverage, because this is a debt economy, this is a credit economy, as people's positions start to degrade, as the market starts to fall off, right? They now will reach out to their particular, first their counterparties, but also reach out to their connections and the people that they have, their network, and say, hey, we got to do something about this because this particular policy is damaging this particular market. And then that now is now starting to impact our positions because this is all integrated, right? And so this is another reason why just because a person has a political position, they can't do what they want to do. And this is something when we saw Trump, he talked about how Jamie Dimon speaking, right, really kind of swayed him, right? He talked about that, right? Because he understands Trump's not done by any stretch of the imagination. Don't let people fool you. He does certain stuff on TV to get people to think certain stuff. He's not done by any stretch of his imagination, right? But he doesn't maybe see the whole picture, but I think he's been made aware of the whole picture now. And he understands I may have to proceed differently because my actions can be negative to these other people. And these aren't lightweight people that you just can run over just because, you know, I want to say something on True Social. Okay, let's keep going.
Point, because we did see the stock market tank. I mean, the NASDAQ, looking at that, is just an extraordinary line downwards. But that didn't seem to faze Trump in the same way as the bond market. Just go into that. Why is that such a key difference?
Yeah, well, the NASDAQ or the S&P 500 or the Dow Jones, that is effectively the price at which corporate America can raise money. So the higher their share prices, the cheaper it is for them to raise capital. You know, that's why companies like high share prices. But the bond market really is the equivalent for governments. And so the pain in the stock market doesn't directly impact what Donald Trump wants to do in terms of tax cuts. The bond market absolutely does.
Okay, so something we talked about, sorry for cutting that off, and he talked about the pain in the stock market doesn't really impact Donald Trump. It doesn't, because the stock market is where corporations go to raise money, right? But the bond market is where the government goes to raise money. And we're going to get into the implications of that. So if the government needs to raise money to finance government operations, government activities, and we have people saying, well, you know what, let's sell government debt, right? Let's demand a high yield and sell government debt. The challenge is that it now is going to become much, much more expensive for our government to raise money. And something that Trump has run on is we're getting ready to try to cut government expenses. But now the cost of financing has gone up. So this is why he had to react to it, right? So that's why I said the stock market selling off. I never said that the stock market selling off was going to get Trump's attention. I said from the gate, it's the bond traders that's going to get Trump to change this whole situation, not the stock traders, right? We're really not that important. It's the bond traders that was going to make Trump get his life together. And we saw that happen. Now he put a 90-day hold on this and this, that, and the third. And he want to, you know, talk to the dude in China, just hit me up, let me know what's going on. His whole tone changed because he realized that I can't finance this government if the bond market won't allow me to do it. Because you'll mess around and be financing your debt at 20%. And the United States ain't built for that, right? We're not built to finance under those type of terms, right? So we'll be getting banana republic terms. And we're not used to that inside. We used to finance the debt at 4.5%, 3.5%. The 10-year went to 5%. These people lost their mind. That's just 5%. Right? And what it's showing is that people's long-term perspective was off. Because they didn't go up on the short term, they went up on the 10-year. So it'll go to show them that their long-term analysis of where this thing was going was starting to get skewed, right? So let's keep going, right? So hope that made sense. You got any questions, let me know in the comments. Let's get back to this particular presentation. And big up for YouTube for not taking down my stream. Right? So we want to talk about if the cost to borrow goes up, right? How does that impact the ability for government to finance its debt spending? So that's something that we want to ask ourselves. See? So if the bond market is saying that we're going to ask for a higher yield, right? Because we believe that this particular situation is very, very unstable. There's a lot of things going here that we don't understand. So to absorb or to manage or to compensate for that risk, we're going to ask for a higher yield. How does that impact the ability for government to finance its debt spending? So these are the questions that you should ask yourself, right? Because once you answer these questions, you'll come out a much more informed person. So let's talk about how does government debt work? So what is government debt and how is it paid back, right? So this is from World Economic Forum, okay? So really quickly, borrowing allows governments to spend more on public services and projects than they raise in taxes. So they often borrow to bridge that gap between their income and spending because tax rises are politically difficult, leaving citizens with less money and threatening economic growth, right? So countries borrow from each other, from global organizations like the World Bank and the International Monetary Fund. So we see a lot of what we would call third world organizations, right? That's just a term, that's a Western term. They do a lot of borrowing from the World Bank and the IMF. The United States, because it's such a robust economy, we can go out into the public markets, right? And we can sell debt to the public markets. We don't necessarily have to go to the World Bank or the IMF, right? But governments also raise money by selling bonds, often to institutional investors or pension funds. So an investor buying a bond is lending the government money for an agreed term. Many bonds pay out interest at regular intervals known as coupon payments, right? So some bonds are very short, others last for decades. Here's a breakdown of the bond. Buying government debt is normally a safe investment if you're lending to a rich and stable company. As Investopedia explains, the U.S. is usually seen as the lowest risk because it's the world's largest economy and has never defaulted on its sovereign debt. So here's something I want you to understand. I recommended to somebody a few months ago that they should buy U.S. debt, right? Not sure if they understood me, not sure if they got my analysis, not sure if they believe what I told them. Cool. But I told them. And the reason why I told them is because they were trying to do something and I wanted to make sure that that guarantee that they would get paid would be there, right? Something that was talked about in the presentation from the guy from the UK, the economist, is that Trump is running with a guy who believes that if things go a certain way, the United States should just default on its debt. That's going to be very, very detrimental to people looking to buy United States debt because the United States has never defaulted on its debt. Other countries have. You got countries that every 10, 15 years, they default on their debt for different reasons. United States has never defaulted on its debt. So that's why you'll never get me to all this America's doomed, America's going down. I don't buy into that because there's no scenario that people can give me where the United States defaults on its debt. Just give me the scenario. And they can't because they don't really know they don't know the plumbing of the system, right? All of those channels are all selling you gold on the channel. So of course they got to get you to believe that the American financial system's under stress because they're selling you gold, right? I'm talking econ and selling you an options training class. I don't sell gold on my channel. I don't sell silver, right? So they are looking for an audience that wants to believe that stuff so they can turn around and sell you gold as a security. I'm telling you, your security is going to be your skill level. It's not going to be an asset class, right? So that's what I want you to understand is that people are looking to buy our debt because we've never defaulted, and because we never defaulted, we can pay out what's considered a very low rate in respect to other countries in the world. United States never defaulted on this debt. Never. It's never happened. So we'll be waiting for it to happen the first time when it does happen. Right. But I ask people, what is going to be the scenario to make these economic cataclysms happen? And nobody can tell me. Right. So that's why I'd encourage people, don't buy into this stuff. You can be prepared, but don't be sitting around waiting for it. Right. Because that's not what we're supposed to be doing anyway. OK, so that's that. So we understand government debt. OK, let's go here. Let's talk about this particular budget. So this is from April 10th. 2025, so really a few days ago. House Republicans passed a new budget. Here's what's in it. Here's what I want to show you, right? They extended the tax cuts, which means what? Less money is going to be brought in through taxes. So what are we doing first? We're extending tax cuts. So less money is going to be brought in through taxes, right? They extended them, right? Additional tax cuts allowed, right? Then spending cuts, they cutting spending. So they cutting spending, but bringing in, cutting spending, cutting taxes. Spending increases, right? Potential effect on the debt, right? So current is going to be 6.9 trillion. Okay. Debt limit increase, right, is going to go to $5 trillion. So they're looking to increase our debt by 5 trillion, right? So I want you to understand, remember that number. They're looking to increase our debt by 5 trillion. Here's another article from Bloomberg. With the budget approved, the way is open for a follow-on package to cut taxes by 5.3 trillion over a decade and raise the debt ceiling by 5 trillion in exchange for 4 billion in spending cuts. So they only cutting 4 billion, but they want 5 trillion. See? So I want you to understand that. Let's do numbers. They looking to cut 4 billion, which hasn't been accomplished yet, right? We got to actually cut it, right? But they want to raise the debt ceiling by 5 trillion and do cut taxes by 5.3 trillion over the decade. Right. And so we're talking about Republicans now pass. I think now the bill has to go to the Senate. But I want you to understand something. We talked about this. If the cost of borrow goes up, how does that impact the ability for government to finance its debt spending? So if we're looking right to raise the debt ceiling by $5 trillion and we have to go to the bond market to finance that debt, and the bond market is telling us, right, that we want a higher yield to finance your debt. What does that mean? When the debt now goes to get paid off it's going to be more expensive to pay it off. Right? So that's why Bassett had to get Trump on the phone and say, homie, you got to switch up how you doing this. Because he, as an ex-trader, right? He knows he used to work for Soros, right? Made a lot of money as a trader, way more money than me, right? He balling off the money he made trading. He knows how these financial systems work. So they got Trump on the phone and say, Trump, you got to switch up how you doing this. You took it to this point, because if we can't finance this debt, we don't have a government. Right? Because to be real with you, Trump don't have a budget yet. Trump don't have a budget yet. So we 90 days in, Trump still does not have a budget because why? It hasn't passed through. He ain't signed it. So if the bond market is telling us, well, we're going to want higher and higher yields to finance your debt, it means that when they go out into the bond market to finance this particular debt, right, it's going to be more expensive, right, to service that particular debt, right? And then we got, 3.5 more years of going back and forth. So every time we do a bond offer, we got to deal with this type of calamity. That's why they had to tell Trump, man, you got to calm this down a little bit. Right? So now he can come up with whatever story that he want to come up with. But really what happened is the bond market dictated this change. Because why? They dictate this situation because that's who's going to be buying our debt. Right? But we got to understand the plumbing of the situation to understand that's how that works. Okay? So that's that. Now, many people talk about, we're going to go ahead and say this, we'll get up out of here. Some guy, we want the government to run like a business. Okay, so we're looking at Microsoft's balance sheet. Microsoft got $71 billion in cash. They got $102.9 billion in debt. Now, I don't know what their assets are, but that's their cash and that's their debt position. So when people talk about we want the government to run like a business, again, people just be saying stuff, right? We're the only group, we, Black Americans, that are told that we got to start businesses with the cash in the bank, right? That we got to do sweat equity and we got to do, everything got to be cash accounting, which is what I do. I do cash accounting. Everything got to be cash. And, we can't look to go get no kind of finance. We the ones got to do that. Don't nobody else have to do that. They go get financing, right? This is Apple, right? Apple got $57 billion in cash, got $96 billion in debt. So their debt is greater than the cash they got in the bank. Don't know what their assets are, but I know what their debt and their cash is. So if they can't cover all their debt with their cash. So that's why when people say, well, we want to run the government like a business. I know these people have never run a business, right? Because many large organizations are run with what we call debt leverage. They got a lot of leverage in debt. They looking for it. They want it. So that's what I want you to understand is that this is how this game is played. You don't have to play it that way, but this is how this game is played. It's financed. Our government finances, our businesses finance. You the only person they telling you got to start and try to build $1 million business with just cash in the bank, right? And you got to keep reinvesting your cash to build your business. Everybody else go get a line of credit, and that's what they use to build their business, right? So that's what don't mean you got to do that. I'm just saying that's what other people doing. Don't mean you got to envy them. I'm just saying that's what they do. You don't have to be involved in that, right? But I'm just telling you this is how these things work. They're able to go and get capital, right, in exchange for equity in their business. They go get lines of credit and they use that to build their business. They're not being told you got to take $10,000 and turn it to $10 million because that's almost impossible to do. Okay, so let's keep going with this particular presentation, right? So now that we rolled all this out, now do you understand why you can't mess with the credit desk? So when I try to tell you, you can't mess with the credit desk, this dude sitting on the phone, that's the credit desk. That's where the buck gonna stop. All that other stuff on the internet, your little fan base, the people you got to do, that doesn't mean anything, right? Because everything got to still run through that credit desk. And what's going on in that credit desk is going to dictate. So if you're a government and we got to sell debt to finance our government and we can't sell at a certain number, we have to try to make ourselves look more attractive to the people that we need to sell debt to. That's pretty much going to be it, cut and dry, right? So SE Key, I don't know what this particular currency is, but big up. Appreciate you coming through with that, right? Ray Gun, man, appreciate you coming through as a mod. Miss Phoenix 91, appreciate you coming through with a $5 super chat. What's up to Toledo, Ohio? Appreciate everybody for coming through. Y'all stay safe, man. Stay encouraged. Be easy out there. I'll talk to y'all later.